So once again here, we got 3 clues on this 89 range chart. The first clue was the bull channel, right? Got that big bull channel, right? Buying pullbacks, new higher highs. Again, sell the highs, buy the lows. Second clue we got was inside day, and the inside day says there's a high likelihood we'll go up to the top and then come down to the bottom and then go back to the top. If we break out above the highs, right, we'll buy a pullback. If we break below the lows, we'll sell a retracement. And the third clue was easy. It was the wave pattern here, right? The pullback pattern. There's your lows, there's your highs, and of course, go from low to high. That would be A and that would be B. That creates your trigger zone, which of course is considered C, and then D will be way up here, but obviously we're looking for the wave pattern long. And of course the wave pattern touches the trigger zone and keeps going. And we knew based upon this third clue that if price went above that 101 even, it would be triggering that 89 range wave pattern long, and then we wanted to be buying pullbacks all the way up. Now, this was the initial assessment using an 89 range chart. Remember that level if we got above 101 even. Now let's zoom in a little bit faster though. I want to show you guys here another time frame, a 34 range chart. Now the 34 range chart is very special because it finds all of these auto levels. So all of these levels down here, all these white labels are located via the auto levels indicator, and that's of course included with membership. You'll get it as a member, and of course it works on any time frame, but I apply it to a 34 range chart. So my auto levels indicator comes out, marks the levels for me. There's that bull channel, right? So 34 range chart, what does it do? It just gives me a little bit more detail. So the first thing we see is, okay, there's that bull channel, got the bull channel. Well, let's now look at what else do we see here. What didn't I see on my 89 range chart that I can see on my 34 range? The biggest thing was right here. We didn't quite pick up on the fact that we had broken above the previous highs and failed when we looked at the 89 range chart. So the buyers had failed just after midnight. And of course, whenever something fails, we have a failure pattern, which of course gets you in the opposite direction. This happened overnight. Well, if you recall, we were inside day, right? This is the range from Wednesday. Now, remind me, folks, what happens if buyers push price above the previous highs and then they fail? It's a huge sign that this price should come all the way back down and test the previous lows. Now, this is nothing new, right? We've always known about this. And this goes, honestly, for almost every range you see. It doesn't need to be the previous highs and previous lows. Find any trading range. If it fails the breakout, it'll come all the way back down to the lower end of that trading range. 8:30 news came out really great, dollar bullish. And it was funny because we said the numbers below 400,000, everyone's going to react bullish to the dollar with that. And of course, in this case, why did crude rise? Because what's good for the dollar is good for the recovery. What's good for the recovery is good for demand on crude oil. So we had to kind of dig into that news number a little bit and remind people that the negative correlation on crude oil doesn't work when there's fear. And the fear, of course, was fear of missing out on lower prices. So dollar bounces, bullish dollar news at 8:30, and of course crude, what's good for the dollar now is good for crude, good for the recovery, and of course price jumps. Now when it jumps above that 101.20 area, I'm going to buy a pullback here and try to, of course, take it up. I make 20 ticks, again with an 89 range wave pattern. You can see the actual pattern itself right here. This is a 4 range chart. Now my 4 range chart is basically price action with the benefit of indicators. Okay, it's a time and sales window with the benefit of indicators, what I consider the 4 range chart to be. So of course I see price go up, gets above that 101, basically a level of resistance over here. We break through resistance, I buy a pullback, it gets me a +5, a +10, and then you can see here, right, it comes back over and stops me out. Now when it rolled over again, it got below this level right here. And this level right here, well, this of course is the BMT on this chart, but more importantly though, what was it? It was the failure now of the 89 range wave pattern. So once we saw that wave pattern fail, then we knew, aha, 34 range wave. So 89 range wave fails, I grab the 2-step pattern short. As you can see, it went down +5. I made a mental mistake on this one by trying to get too greedy with my profit target. I have my profit target sitting down here at the lows here. You can see it went +5, bounced me back out, -5, and then by that time it's 9:15, 9:20, and I'm sitting on hands here for the US Open. Disappointing because you can see we had the right idea with it. It just got real sloppy there before it finally took that big tumble. So I sit on my hands from 9:15 to 9:30. I'm disappointed I only got 0 ticks out of that second trade, 20 ticks out of the first trade, and of course, when we break through, now we're in full swing going down. Remember too, we witnessed them failing at the previous highs, right? 34 wave now short, and we're trying to go test that 100 level. New lower lows, wave 1. New lower lows, wave 2, and again, the target is now, again, going down to that 100 level.